Hi everyone, I am Dan Lohmar, Certified Financial Planner with United Wealth Management. I hope everyone is doing well out there, staying safe, staying healthy. There's a lot going on and with our jobs. Once again, here we are in the airline industry getting hit on two fronts again. Getting our income is under attack, and then also taking it on the chin with investments and stuff like that also. So the CARES Act got passed last week, so I just want to put some information out there just to let you know what it's about, and it may or may not apply to you, but it might apply to maybe some friends or some family members for you. So it's always just good to know what is out there and make sure you get the straight scoop on it. This is for educational purposes only. Please don't take this as tax, legal, or investment advice. Seek the guidance from your own tax advisor, your personal wisdom on your situation. Again, I'm just going to go over, this is just going to be an overview, and I'm not going to go real in depth on this stuff either. So if something applies to you, I would encourage you to go a little bit deeper with your tax advisor. And if you don't mind, go ahead and subscribe and hit the bell icon so you know when new videos come out. Thank you. Stimulus checks, that's the big one. $1,200 per person. A couple can get $2,400, and you can get an additional $500 per child. So say a family of 5 could get up to $3,900. There are phase outs. Under $75,000, a single person would get the full check, and as their income increases and above $99,000, it's going to be phased out to zero. For a married couples below $150,000, they'd get a full check, and then it phases out above $198,000 for a couple. There are some rules and some numbers in there for filing head of household. I just don't have those included in there right now. Here's the gotcha on the stimulus checks, and it's the gotcha is that it's the year that the income is based off of. What they want to do is help supplement 2020 income. If you took a hit in 2020, that's what they're trying to patch over. That's the whole intent of this. The problem is they can't wait till they know what your 2020 income is. When you file your taxes, that's going to be way too late. So what the government is doing is looking at your most recent tax return. So that's either 2018 or 2019, and that's what they're basing the information off of. So there's a little bit of a gotcha there when this happens, and that is you could have had higher income on your most recent return that would disqualify you from giving this stimulus check, and you're taking a hit in 2020, and so that's a little bit of a gotcha. So it's a tax credit essentially, and you're getting if you get the stimulus check, it's an advance on a tax credit for your 2020 income. So that creates the situation where if your income took a hit, but your previous income was higher, you actually won't see a stimulus check. So a little bit of a gotcha there, something to be heads up for. On the other side of that is that you could have had lower income on your most recent tax return, and you could have higher income now, and you would get a stimulus check. So that is just something to be aware of, and it is creating a little bit of confusion, but that is something just to know that can potentially happen when it comes to those things. They are suspending RMDs for 2020 only. The reason they're doing that is because RMD calculations are based on the account balance ending 2019, December 31st. And so obviously account balances in the stock market were substantially higher then. And so they calculated them out, and now that we've seen a decrease in the stock market values, that same percentage is a larger percentage of the account you'd be taking it out of. And so the government is just saying, hey, look, we're going to give you a chance to leave that money in there, give it a chance to recover, and recoup some of those losses you may have taken. So that's the entire intent of it. There is an opportunity, if you've already taken out, there is an opportunity to pay that money back. It has to do with some 60-day rollover rules. Don't really want to go into the details of it right now because it's a little bit deeper than what I want to go. But just know if you've already taken your RMDs out and you want to consider paying them back, just dig into those rules for yourself and see how that applies to you. Charitable provisions. Normally, when you do a standard deduction for when you file your taxes, normally you cannot take a charitable deduction because you're already doing the standard deductions. They do allow this now. It's called a qualified charitable contribution, and it's above the line $300 charitable deduction for donating to charities. It's not a big tax benefit, but what the government is doing is they just want to encourage people to donate to nonprofits that might be helping in the recovery. Doesn't have to be one that's participating in the recovery, but they just want to leave that door open to make it a little bit easier so that some of those folks, there's a little bit more free flow to those folks that are kind of helping things out. So that's the whole idea behind it. And again, it's an above the line deduction for up to $300, and that applies if you're even doing the standard deduction. Relief for student loan debt. So this suspends required payments until September 30th, 2020. No interest will accumulate during that time period. Now, you do have to coordinate this with your loan provider. It's not automatic. So if you do plan on suspending your student loan payments until that period, you just don't stop. You got to coordinate with them. Otherwise, they're going to consider the payments delinquent. So make sure you take care of it that way. And then also, if the loans you're paying off are in what are called a student loan forgiveness program, then the time that this is delayed, it still counts towards that. So you get a little bit of a benefit there in that it adds towards the time that you have to put in towards that student loan debt. IRA and 401k enhancements. What they did here is they eased some restrictions on withdrawing from IRAs and 401ks. And the rules apply to those affected by the coronavirus. And just like in the past, when they've eased some tax rules or given some tax benefits to maybe people that were affected in a disaster area, this applies to those that are affected directly by the coronavirus. And essentially what it does is just relieving some restrictions. But what I would say in the airline industry is that we are probably most affected, and these are all the qualifications that would apply to being eligible to do this. And I would say number 2 here: experience adverse financial consequences as a result of being quarantined, furloughed, laid off, having work hours reduced. I would assume that qualifies many of us. And my understanding, too, is that the IRS is going to be pretty broad in their interpretations of things, and that they would look at these pretty liberally. So anyway, so that's what qualifies it. What is it exactly? It allows the ability to withdraw from an IRA or 401k a little bit easier. So normally if you withdraw under 59.5, there is a 10% penalty, and it's a taxable event if it comes from a tax-deferred account. And so what it's called is a coronavirus distribution. So it's not a hardship withdrawal. It actually has a designation called coronavirus distribution. And what it does is it waives the 10% early withdrawal penalty. You can withdraw up to $100,000. There's no mandatory withholding. So normally your custodian, your plan sponsor would withhold money back for taxes. In this case, if you draw out $100,000, you're going to get $100,000. Just know it's still a taxable event if it's coming out of a tax-deferred account. And the taxes can be paid back over 3 years. So they would be paid back when you file your 2020, 21, and 22 taxes. And you can actually roll the money back into the plan over a 3-year period. And if you do that, what you would do is you would amend your return for 2020 based on that, because it is a taxable event in this year if you take it out this year. As far as taking money out of a 401k or an IRA, I think it's a last resort, but these are pretty unique times, and you got to do what you got to do. Everybody's situation is different. I would not encourage it. Again, I don't know. I can't say that because everybody is different, but if you have some other options, look at that. But anyway, this is an option. The other thing, too, is they bumped up the maximum amount on 401k loans. So normally the maximum amount is $50,000. So they increased that to $100,000 or 100% of the vested balance, whichever is lower. The thing I would say about this, and I don't think this has changed, is that if you default on a 401k loan, it does become a taxable event, and the 10% penalty applies. So if you're looking at a situation where you might get laid off or have a significant reduction in income, and you default on this, that's the thing to be very, very careful of. So generally 401k loans are set up a little bit more stringently, where you have a payment plan. So you have to keep the payments going, or you have to pay it off all at once. It's not like a mortgage where you can make extra payments on it usually. Now that's the way our plan is, but yours might be different than that. But these are some things to keep in mind as if you were considering a 401k loan. Small business loans, that's probably the majority of this stimulus package has to do with money that they're giving to small businesses just to keep people on the payroll and keep money flowing. And this is the biggest part of that package. And my understanding is the banks are saying these are pretty good deals and pretty easy loans to get. That's just an overview of the topic. I know that you can go deeper on this, and that's what I would encourage you to do if you feel like a situation applies to you. I would dig into it deeper, talk to your own tax person about it. If you have any questions, comments, recommendations, or referrals, shoot me an email, dan@unitedwealthmanagement.com, and I usually have a contact me link in the show notes in YouTube. If you want to talk about your situation, if you're considering retiring and all that's going on, hey, let's have that conversation. I'm open for business, and usually the first meeting is it's all it is. It's just a conversation to talk about what it would look like, and most importantly is for me to listen and understand what you're looking for and what I can offer to help. Also, connect with me on LinkedIn. Just trying to add to the network there. And if you like this video, give me a thumbs up, and remember to subscribe and hit that bell icon. Besides that, hey, stay safe, stay healthy, stay focused in the cockpit. That's probably the most important thing we can do, probably the easiest thing to get distracted from. But thanks for tuning in, and stay strong, stay healthy, fly safe.